Welcome back, everyone. And now we are starting section 4, and we're going to focus on risk management strategies. This section is really going to help make or break your accounts in the long run, because if you keep scaling up risk as you make more, the chances of you wiping that out, because we're going to have losses, right? They become greater when you do that. So we need a proper management system in place so that if you do end up on a losing streak, you protect your capital and hopefully your profits were big enough to cover those losses and still leave you over with profit. So let's get into it. If you haven't already, hit the subscribe button, click that thumbs up, as this mentorship is going to carry on throughout this year, week after week. So we're on week 11, and we're going to start focusing as us being money managers. And the reason why I say that is because we don't want to be gambling in the markets. We want to be managing money and growing that money in the markets. So we need to be educated risk takers. There's always going to be risk in the markets, but can we do the right pre-work calculations, the probability, sort all that out, so when we do take that risk, it's not as risky as it could have been if we did this or we did that or we didn't do this, right? So not losing money is a lot better than praying for a moon and just watching your money go down, 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 and just mentally saying if I just keep holding, if we keep holding diamond hands, we're going to hit the moon and it's going to be all worth it. Well, specifically what we focus on, especially in futures trading, there is a long term, you could hold it, right? And it's going to steady grow, but we focus on day trading and getting our trades done within the same day, hour, or even just the same week, right? We're not holding and praying for a big run. So a win equals a win. Oh, let's go back a slide. That was too far. A win equals a win. Partials equal a win because we're taking risk off the table. We were able to pay ourselves. And just in case that trade does go against us, now we lost less money, right? Or maybe we pulled out enough profits that even if it went fully against us, we're still left with the profit. Break evens, that's what BE stands for. Break even equals a win. We didn't lose money, right? So we could have been wrong on the trade, but because of our proper risk management, we were able to maybe take partials and then move our stop loss to break even, or if we're more aggressive trading and want to just do a full 100% win, then we move that stop loss to break even, take the risk off the table, and now we could hold it and see if it's ever going to hit our take profit or not, right? And then a loss is a loss. So we have 3 chances of winning versus a 1. So, 1 in 4, you're going to take a loss. And we want to make sure that we stick to this program where we're able to put the edge in our favor by taking more wins versus losses. Now, just this alone is not going to guarantee you a win, right? Because if you're wrong and you're taking partials and break even most of the time, when those losses come and you're not able to take partials or break even on that trade, this loss might wipe out all this that you've been doing, right? So combination of this with your price action studies, where you're at in the market, having your strategy when trading, entering, and knowing the flow of the markets, plus a risk management strategy like this, is how you're going to be able to win in the long run. So why does it matter? Well, I personally have not seen someone have a 100% win rate, and if they do, it's because they're really aggressive on their stop loss and they are taking partials and break even as fast as possible, therefore making sure that they always are in the green, and that gives them that 100% win rate, right? But that's not a real, your trade plays out every time and you're pulling out a good profit every time, right? So careful with the win rate. You can't be profitable with less than a 50% win rate. It's all your risk to how much you're going to get rewarded if it does play out. So the higher that ratio is, so if your risk is smaller and your reward's much bigger, and that plays out 30% of the time, but because your reward's much bigger than your risk, even though you only won 30% of your trades, you're going to still be a profitable trader, right? So win rate is not everything unless you're having like a 1-to-1 reward and risk, or even less, right? 0.8 or even less than that, right? Like some sports betting, you're betting $1 to win 80 cents, right? So you would have to win more. Your win rate would have to be much higher with that type of trade or bet, because of the fact that you're actually winning less than you're risking. So your win rate has to make up for that. Where if your rewards are bigger than your risk, that's going to make up for a low win rate. So you got to fine tune that balance and see how your strategy plays out. And that is why we make those trading journals, where I use personally every single day, every trade, where you input your trade information, the pivot tables, all the metrics are automatically calculated within Excel. So that way, all you got to do is just put your trade data in there, and all the calculations, you could reference all your data, so you don't have to look at that long list of trades, right? Like your dashboard's right here, and we sell that in our store. So if you click the link down below, you'll get access to that, plus any other resource we develop in the future. It's one price. You get all of our resources. So check that out if you're interested in that. And then having that appropriate risk size. So, for example, in Apex Trader Funding, which I use and have my funded accounts with, I do 25K, and I have won 100K, but most of mine are 25K accounts, just because of the way they're set up. Your profit and loss is the same. Where some of the bigger accounts, your profit's bigger, but your risk, like the amount you could lose, gets smaller and smaller per dollar. So that's why the 25K gives you that biggest fluctuation in price. So anyways, so for example, 25K. Max I'm risking is $250 max. And that allows me maximum losses in a row from a fresh account. That gives me 6 losses. I haven't had 6 losses in a row, and the only time I have big losses like that chained together is because I had a bad day where I revenge traded and ended up taking 3-4 losses in a day, and then the next day I had a loss and then maybe a win or something like that, right? And I have identified that in my trading, and now I know that I gotta do 2 trades in a day max. If I win, I win, we're done. If I lose, I'm going again with half the risk. So I'm not doing 250 then 250 again. I am getting off of the contract and I'm going back to the micros, and I'm doing 5. So half a contract of the normal ES, right? And now if I lose $125, I'm done for the day, right? So now I could take more losses if they do chain together, because my risk is getting smaller. So therefore, that 6 at $250 that I could take before my account's blown, I have now added more losses by reducing my risk when I'm in a losing streak. And then it resets the next day. So if I'm half risk and I take a loss again, tomorrow we're back to full risk. We're resetting, because I used to stay at half risk, but then my wins weren't making up for all the losses in the grand scheme of thing, and I was unprofitable. So I figured out for that day, half risk that second trade. Next day, back to full risk. It's a brand new day. My setup could play out, and we're good, right? So that's my strategy for risk management, and what I've seen works with my trading setup, my strategy, and the data proves this is how I need to manage my risk, and it will work out if I keep sticking to my rules. So that's it for this week. We'll go to week 12 next week, where we're just going to dive deeper into risk management. I kind of set the storyboard, and I want you to start thinking about your trading. And if you haven't traded, do some paper trading, just so we can get some data for how you're going to trade. And that way you could start fine tuning your system and getting an actual edge for yourself so you could become profitable in the long run. So see you all next week. Don't forget to subscribe, click that thumbs up, and we'll see you next week for the 2024 trading mentorship to continue. Peace.